How Ford makes more money from loans than selling cars. $13.27 billion. That's how much money Ford made last year, not from selling cars. From giving people loans to buy them. Ford Motor Credit, a company most people have never heard of, quietly brought in over $13 billion in 2025. And here's the part that should make you stop and think. While Ford's car business posted a net loss of over $8 billion last year, Ford Credit was profitable. So let me ask you something. When you walk into a Ford dealership, what are they really selling you? Because after watching this video, you'll never look at a car loan the same way again. Most people think Ford makes money one way. They build a car, you buy it, they profit. That's the story Ford tells in its advertising. It's not the full story. Ford Motor Company is actually two businesses, running side by side. The first is what you know. Ford Blue, Ford Pro, Ford Model E. They design, build, and sell vehicles worldwide. In 2025, this side of the business lost over $9 billion in operating income. Yes, lost. $9 billion. The second business is Ford Motor Credit Company. Established all the way back in 1959, this is Ford's private bank, and it has been quietly running in the background every single time someone finances a Ford vehicle. Ford Credit brought in $13.27 billion in revenue last year, growing at over 8% year-on-year. But here's where it gets really interesting. Ford Credit's profit margins, the percentage of money they actually keep, have historically been significantly higher than the car-selling business. At its peak, Ford Credit has posted profit margins of up to 30%. Think about that. Ford can barely squeeze 3 to 5% margin from designing, engineering, manufacturing, and shipping physical cars. But lend someone money to buy that car? Suddenly you're looking at margins 10 times higher. So how does this actually work? When you walk into a Ford dealership and say you want to finance a car, here's what happens behind the scenes. The dealer runs your credit. They get back what's called a buy rate, the minimum interest rate Ford Credit will accept for your loan. Let's say Ford Credit tells the dealer, this customer qualifies for 5%. The dealer does not have to offer you 5%. Under Ford Credit's agreements, dealers can mark that rate up, typically by 2 to 3 percentage points. So they might offer you 7 or 8%. That extra 2 to 3%? That gets split between the dealer and Ford Credit. This is called dealer reserve or finance reserve. It's a completely legal system, and almost nobody outside the industry knows it exists. Now you're probably thinking, well, that's just a couple of percent. How much does it actually matter? Let's do the maths. Say you finance a $45,000 Ford F-150, the average price of a new vehicle in the US right now. You take a 72-month loan. At 5% interest, you pay roughly $9,000 in interest over the life of the loan. At 7.5% interest, that becomes about $13,800. That's nearly $5,000 extra, split between Ford Credit and your dealer, that you paid without ever knowing the rate was marked up. And Ford Credit does this across millions of loans, every single year. But Ford Credit isn't just collecting interest on your loan. It's operating like a full financial institution. Since 1988, Ford Credit has been active in the securitization market. That's a Wall Street term, but let me explain what it actually means for you. When Ford Credit gives you a loan, they don't just sit on it. They bundle thousands of loans together. Yours, your neighbor's, the person down the street who just bought an Explorer, and they sell those bundles to investors on financial markets. This means Ford gets its money back almost immediately. Then it lends that money out again to the next buyer, then sells that bundle to investors again. It's a machine that recycles money, continuously generating income from the same pool of capital. And Ford Credit does this with retail loans, wholesale loans to dealerships, and lease agreements. Automobile finance receivables, the industry term for car loans they're owed, are one of the largest classes of securitized assets in the world. And Ford Credit is regularly one of the largest securitizers in the entire market. This isn't a side business. This is the business. that happens to sell cars as its customer acquisition strategy. Now here's where the business strategy gets genuinely clever. You've seen the ads. 0% APR for 72 months. No interest. Amazing deal, right? But think about this from Ford's perspective. Ford Credit is a business that makes money from interest. Why would they voluntarily charge you zero? Here's why. When Ford offers 0% APR, it's not Ford Credit absorbing that cost. It's Ford, the car company, subsidizing the interest rate. They're essentially paying Ford Credit on your behalf to make the deal attractive. Why would they do that? Because moving a car off the lot solves a bigger problem. Inventory costs money to store. Depreciation starts the moment a car is built. A car sitting on a lot is a liability. So Ford calculates, it's cheaper to subsidize your interest rate than to store that vehicle for another 3 months. You think you got a deal. Ford thinks they avoided a loss. And Ford Credit still gets paid, just by the manufacturer instead of you. This is a masterclass in financial engineering. The car buyer feels like they won. The dealer made a sale. Ford cleared inventory. Ford Credit kept its income stream. Everyone in the chain got what they wanted. And you had absolutely no idea the maths was happening. And before you think this is just a Ford story, GM Financial, Toyota Financial Services, BMW Financial Services, Hyundai Motor Finance, Subaru Motors Credit, Nissan Motor Acceptance Corporation. Every major car manufacturer runs a captive finance company. Captive, because the financing is captive to that manufacturer's ecosystem. You walk into a Toyota dealer, they immediately connect you with Toyota Financial. You walk into a BMW dealer, BMW Financial Services is ready to go. The entire industry was built this way. Because the car isn't just a product, the car is the hook. The loan is the product. And that loan, with its interest, its dealer markup, its securitization, its insurance add-ons, generates a revenue stream that lasts 5, 6, 7 years. Long after the car has driven off the lot. Long after the dealer has spent their commission. Long after Ford has forgotten your name. Ford Credit is still collecting. Every month. Like clockwork. So what do you actually do with this information? 3 things. Practical ones. Number 1. Get pre-approved before you go to a dealership. Go to your bank. Go to a credit union. Get them to pre-approve you for a car loan before you step foot in a showroom. When you have your own financing in hand, you walk in as a cash buyer from the dealer's perspective. They lose the ability to mark up your rate, because you already have a rate, and they have to beat it. Number 2, always ask the dealer for the buy rate. You're entitled to ask, what is the base rate the lender approved me at? Some dealers will tell you, some won't. But asking the question alone changes the dynamic. They know you know the game. Number 3, check your total interest paid, not your monthly payment. This is the oldest trick in the playbook. Dealers will negotiate your monthly payment until it sounds affordable. But stretch the loan to 84 months? 90 months? You could pay $10,000 to $15,000 more in interest over the life of the loan. Always ask for the total cost of the loan, not just the monthly figure. Because the monthly payment is what Ford Credit wants you to focus on. The total cost is the number that actually matters. Ford built one of the greatest financial machines in corporate history, and they did it by making sure you only ever looked at the shiny car in the showroom, not at the loan document in the finance manager's office. That's the business strategy, and now you know it. If this video changed how you think about car buying, share it with someone who's about to walk into a dealership, because the information in this video is worth more than any discount they'll offer you. Subscribe to Grow You Finance, because every week, we pull back the curtain on the hidden business strategies that cost ordinary people money and make corporations billions. I'll see you in the next one.